Stochastic Indicator. The stochastic oscillator is another technical indicator that helps traders determine where a trend might be ending. So let's set it up on our charts and we can run through this step by step. To add the stochastic to your chart, click on Indicators at the top of the screen. Search for Stochastic. Then click on Stochastic. The stochastic indicator is added over here. The stochastic technical indicator tells us when the market is overbought or oversold. The stochastic is scaled from 0 to 100. When the stochastic lines are above 80, the red dotted line in the chart here, then it means the market is overbought. When the stochastic lines are below 20, the blue dotted line, then it means that the market is possibly oversold. Simple rule, we buy when the market is oversold and we sell when the market is possibly overbought. Looking at the currency chart here, you can see that the indicator has been showing overbought conditions for quite some time. Based on this information, you can guess where the price might go. If you said the price would drop, then you are absolutely correct. Because the market was overbought for such a long period of time, a reversal was bound to happen. Here is another example. The price was showing oversold here. You can place a buy position as the price crosses above the blue dotted line. You can see how the price carves an engulfing candlestick after the price crosses above the blue dotted line. That is a second signal confirmation. So place your buy over here. Place stop loss below the engulfing candle. Place take profits at the overbought region. Here is the result. Keep in mind that stochastic can remain above 80 or below 20 for long periods of time. So just because the indicator says oversold doesn't mean you should blindly buy. Always wait for a clear signal.